This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
What is up, everybody? Happy Wednesday, hump day. Welcome back to an episode of Benzinga Live, and we've got a packed show today. We're going to have 3 separate guests on the stream. Joining us first will be my man Hot Trades. You might see him on YouTube. He's got, let me see, let me make sure I got the right. He's got over 50,000 subscribers. He's actually live right now and going to be joining us soon, so hopefully bringing some of his crew over here as well. Hot Trades coming in about 15 minutes. And then after that, we will have a CFA, a certified financial analyst, on this show, who also has a YouTube channel. So we're excited at 12:40. Or sorry. Joe Hogue. Hopefully I'm getting his name right. It's either Hogue or Hoagie. Joe Hogue, the CFA, is going to be coming on at around 12:15. Hot Trades here in about 15 minutes. Gern got good news, the girl says. The girl has no name. We can check out Gern. All right, let's pull up Benzinga Pro. Get my Benzinga Pro pulled up. As always, if you've got stocks, if you've got any trades you want to check out, let me know in the chat. Wow, 33% up on Gern today. That's a decent day for Gern. Let's see what the news is. Geron shares are trading higher after the company announced top-line results from iMerge Phase 3 trial, MDS. Wow. Okay. I've talked about this a lot on the show because I mentioned this yesterday too. We've seen a big increase of biotech runners over the past couple weeks. You know, stocks like these cheaper stocks that end up trading up like 50 to 100 to 200% on the day. And then there's a few different aspects to that. You know, I've talked about how that can actually be, you know, a decent sign that speculation is returning to the market, that people are just willing to take more risk. Because, I mean, if you think about it, you're only willing to buy something that's up 20% on the day if you're willing, you know, if you're feeling a little risky, if you think that thing can keep running. It's not a safe bet buying something that a cheap stock that's already up 20% on the day, but that's what drives those stocks even higher, is that it gets more people bought in. Other people see the stock higher. They see the FOMO. They want to buy in. And you see that speculation a lot, you know, in times where we get, you know, that type of speculation return. Not what we were seeing 6 months ago. 6 months ago, people were taking risk off the table. They said, I don't even want to own Apple at 130 or whatever it is. So, again, I'm not saying like, okay, that's a sign of the bottom to see these, but I don't mind seeing them a little bit. I don't mind seeing some of these stocks really run up like that. Wow, SPY. We got to talk about just SPY making an absolute run right now. Let me see what, oh, shoot. Someone get me, what's the price of a 385 SPY call expiring today? It's not showing me on my Robinhood. I wonder why. I think I gotta go to my settings. Settings. Investing. All right, here we go. Now let's check SPY. I had to turn on the option to trade on. Oh, no, it's still not letting me. I don't know. I don't know what's going on here. I can just Google SPY option chain. All right, let's see. Calls for January 4th expire. I want the 385s. Trading at 72. Is that right? 72 right now? At 11. Oh, no, that was at 11:23. Okay. Yeah, that's what I was going to say. SPY needs to break 144, 385, 0 DTE. Thank you, Quantum. I was wondering because I had a bunch of those. I actually, here, I'll show you guys my. So I had a bunch of 0 DTE SPY calls into the open today. Let's see. SPY. So I sold them. Let's see what I bought them for. I bought 15 at 37. And then I ended up selling them for $1. So that ended up being a pretty decent return, over 200%. But if I would have held on, Quantum is what you're saying, my returns would be a little bit higher. Now higher. Yeah, but here's the thing is I would have had to sat through. I mean, when the SPY went down on that big leg earlier, and we can go back to my Benzinga Pro so we can actually look at the charts. When it went down, I wonder what the... Here, I can look right now on the... Or you might be able to look, Quantum, because for some reason I can't pull them up on my Robinhood right now. But if you look up what the low of the day on those contracts was, I bet... And let me show you what I'm talking about here right now. I bet... I'll go to the 2-minute chart. So here's like where I sold them at, like in this range, like literally like right after the opening. Because the equity on them, when I bought the SPY contracts, it was only about $350 or $400 or something that I bought those SPY contracts with. When it opened today, those contracts were worth like well over like $1,200. And I didn't want to risk this. I didn't want to risk this big leg down from 384 to 380 and see my calls just get crushed. So I sold them here. And I really trimmed because I... did want to hold some because I was like feeling kind of bullish that a run like this could happen at some point in the day. And I wanted to have some skin in the game if we did run like that. But I set a pretty low stop loss and then we ended up seeing this huge leg down. And I'm surprised at how low those calls would have gotten down here when SPY was at 380 because low a day is 28. All right. So I would have been, essentially... Essentially, I'm not mad that right now, if I would have held them, because that would have been really scary to hold those down there and look at that. So I'm fine with that. If anything, I could have just bought more calls, but I don't know. My Robinhood's being weird. I think it's because today I switched it from like a regular. Robinhood defaults you not necessarily to a margin account, but the account that you like have automatically isn't a cash account just because it gives you instant deposit. You have the ability to use instant deposit, whereas a cash account, like you technically, I guess, have to deposit cash, wait for that cash to settle in the account, and then you can trade with it. But Robinhood recently implemented the ability to switch your account to a cash account, which the only difference that means is that you're not subject to the PDT rules in terms of you only get so many day trades in a week and all these things. So I just switched my Robinhood account to a cash account today. So I think we'll take a couple days for that to happen, or now that my money from that trade isn't settled, I have to wait for that cash to settle before I trade it again. Either way, I'll let you guys know how that goes. Because I do like literally, I love everything about, I don't love everything about Robinhood, but like the PDT thing is so annoying. Like that's like the one thing that is just so annoying. Like the instant deposit is great. The ability to like turn on margin real quick, great. Maybe not for everyone, but for okie dokie. And then, sorry, at noon we'll have Ryan Williams, Retire with Ryan on YouTube. So we'll be talking about some retirement strategies and whatnot with Ryan. Excited about that. Apple and Tesla having a great day. I don't know if Jay Rice is in the chat, but we were talking about Apple and Tesla yesterday. He was asking about Apple and Tesla. Both having strong days. Both having strong days today. Let's go ahead and check those out. Tesla, I mean, it's hard to say, right? If what we're seeing is, have we seen the bottom in Tesla, or are we just seeing kind of a bounce, and this trend is going to continue? I honestly have to, and this is just my opinion. I'm not going off of like any, numbers or anything. My personal opinion is that Tesla still up here is probably a little bit overvalued. And I know, people, you'll say, oh my God, the PE is lower than Pepsi right now, all this stuff. A, there's a reason for that. B, PE and all that stuff, it's calculated using, prices and earnings lagging, right? The money that, the earnings that Tesla made previous quarter. Expectations is for that to drop. Now, of course, the price drops too, so that ratio, hopefully remains somewhat steady. But I'm worried about, those earnings and the numbers for Tesla this year being even worse than some people are anticipating. Of course, some of that will be dependent on what's going on with the macro economy, that's going on with interest rates, what's going on with people's ability to buy new and used cars. But out of all the names right now, I'd be willing to take a stab at where we're down, 20+%. I still think there are names I would rather own than Tesla. Something like if I really wanted something in the growth space, honestly, I'd rather own Rivian than Tesla right now. I want to see something. Rivian is currently trading at a $16 billion market cap, and it has $13 billion of cash. So that means that currently, not literally, but kind of, that the market is valuing Rivian's business right now at $3 billion. I think it's worth a little bit more than that. Maybe not. And this is why I think, Tesla still remains a little bit overvalued. Look at the market cap of Tesla compared to Toyota and GM and Ford. So as much as Tesla's market cap has fallen, you can still combine GM and Ford and Rivian and Toyota and not get Tesla's market cap. Tesla will rally. Yeah, and that's why, honestly, Crow, I don't see... that's more my, long-term fundamental thesis of Tesla, is that I still think it remains overvalued, and that, eventually you're going to see that valuation come to a reasonable, which probably, would look something more like 100 billion, which means it would have to come down another, 60% from here. But from a trading perspective, I was buying Tesla calls a week ago, when and made some money on them. Trading wise is a way different story than what I'm talking about seeing the company going long term. And again, this is just my opinion, not investment advice, not anything other than, just what I personally think. Hell yeah, Coyote Sunglasses. Coyote Sunglasses, looks like you've got a good streaming setup. I don't know if that's for music or streaming or what, but if you ever want to hop on the show, let me know. We could talk some stocks, talk some trades, whatever you want, man. Alrighty. All right, let's see if we've got any other. Tesla had 40% growth. What did Toyota Motor? Well, right, and I think, of course, you're paying for growth. But at what point, when people are paying for the growth and the market cap becomes bigger than all other car companies combined, and, essentially the only way to maintain that growth would to become the entire car market, to maintain that growth over time. If you're capturing X% of market share over time, and I think it becomes a lot harder to maintain. I mean, we saw this happen with Netflix. I mean, Netflix stock got freaking crushed for a lot of different reasons, but primarily, or at least right at the top, was because it had stopped growing. And it was in a free fall until it got to a price where people were like, oh, okay, now it doesn't really matter if it's not if it's growing, as long as it just keeps making the cash that it's making, it's actually a decent investment from here. Tesla, if you slow down that growth, the same thing could happen where it reaches a price where, people are like, all right, even without growth, this is worth its underlying assets. I don't think we're there yet with Tesla, is basically my point. And I mean, I from here, if you were asking me which company had a better chance of growing, being some sort of crazy 10, it would be Tesla over Toyota. Toyota's 100% the safer, kind of more conservative play. I understand that. And by the way, I don't own any Toyota stock. Wouldn't really want to own Toyota stock. I think historically these car companies haven't proven to be that great of investments. I mean, monthly chart on Toyota actually looks pretty freaking strong. So yeah, Toyota's growth is probably actually decent. But again, Tesla having a great day today, as is Apple. Apple trading up 2.3%. Actually, Apple is kind of, I mean, it's definitely still outperforming the market, but today they're in the queues and everything, but it's not having like the craziest day out there. Tesla definitely one of the leaders. I'm seeing a lot of growthy plays leading today too. That makes me want to check out ARKK up 4.5%. Wow. Roku up 6%. Netflix up 4%. Let's keep watching Tesla here. A lot of volume too down here. I mean, look at that volume increasing. That's a. I don't know. I don't know. Maybe that's a good sign. Maybe it's a bad sign. Selling Kala at 45, amazing run, 29.45. I don't even know what Kala is. Oh, it's another one of these biotechs. What's up with you guys in biotechs all of a sudden? That's just been what's running? What's the XBI? Yeah, I mean the actual ETF hasn't been running, but maybe it's just some of these like smaller plays that are getting a big jump. One thing, going back to Netflix real quick. So Netflix, I believe, just released its Bernie Madoff documentary. Which if anyone has seen already, please let me know how it is. I would plan on checking it out, if not this weekend, and I will get back to you guys on what I think about it. Spy puts with a little pop. Let's see what Mr. Spy is doing. Are you saying you want to buy Spy puts if we pop even further from here? What time does the FOMC preview? Or the FOMC minutes come out at 2 o'clock, I believe. How's Ford doing? Ford doing all right. I wonder what... I wonder what leaps on Rivian would look like. Because, I mean, it's trading... It's trading so close to its underlying cash value, or the cash it's holding on its balance sheet, which I know it could, it's probably holding some debt too. Let's see. Balance sheet. I mean, it's only got, I guess, about $4 billion in liabilities, but $13 billion in cash. Total assets, $19 billion. And the market cap is $16 billion. So it's literally it gets net assets minus liabilities is like 15.3 billion, and it's trading at a 15.9 billion. I think I got it. I think I gotta buy some. I know they have a bunch of problems. I honestly, I don't know. Something's got to be up here. Oh, shit. Why is Rivian could become a single-digit stock soon? Who posted that? Seeking Alpha. Rivian said yesterday that it fell short of its 2022 production goal. So what? Demand's going to be lower, too. So what? You didn't produce as much. So that's fine. That means you're not going to have inventory problems. Rivian just dropped to a new one-year low. Okay, so what? The market doesn't like it. Oh, wait, you guys can't see what I'm looking at here. I hate to pull up a Seeking Alpha article, but this is why we're going to play flip. What? No, I don't want to. See, this is why seeking alpha sucks, guys, and you should go to Benzinga instead. But I'm a genius, and I know how to get around these things. All right. Wait, how is Rivian's valuation given the production and delivery reality of Rivian shares of EV manufacturing can be overvalued despite something? Where are these assets coming from on its balance sheet then? Is what I'm trying to figure out. The revenue estimate trend for Rivian is also highly negative, with projections trending down sharply in the last 90 days. Downward revisions for Rivian's fiscal year 2022 top line outnumbered downward revisions by a ratio of 13-3. Risks with Rivian: the biggest commercial risk for Rivian is that the production outlook will disappoint. Again, I don't honestly think that the production outlook is as big of a deal, because if they produce 3,000 less trucks than they were supposed to, but the demand is a little bit lower too, that's fine. It's a different problem that Tesla's having, that they're right now producing too many cars that they can't sell. Both are problems. I'm not saying that's fine, but I just don't think it's like the biggest deal in the world when demand is already expected to decrease over the next at least quarter, 6 months. Oh my God, holy cow. I didn't even freaking see this. Oh man. You guys know how I feel about Baba. You know that's been my baby. You know Baba's been my baby. Man, I can't. I sold most of my Baba after because I bought it back at like 70 something and sold it like a week ago, and now it's just freaking crushing it even. And I made this point on the show the other day, because I was like, you know, when Baba got up to like $90 and people were like, oh, it's already gone from 60 to 90, it's up you know, almost 50% in the last whatever, and it's gone up too much, I can't buy it. But when you zoom out, you look at it on a weekly chart, we're still down here. I mean, look at this thing. I'm not saying it's going back to 300 anytime soon. I don't think it is. But we're just this little leg. Like it's even going back to the summer, like 6 months ago, way lower than where we were at. I would be a little wary at buying. Shares are following reports Chinese regulators approved a capital raise for Alibaba. Okay, Ant Group. So I do think it's a buy. I'm not saying I think it's a buy right this second, right now, and it's already up 11% on the day, and probably, you know, let's go to a monthly chart here. You can see how much this stock has gone up the past few months, and typically, you know, that can mean that there's a pullback coming soon. But I think long term, I still like it. I've been saying that I like Baba for a while. Now I finally feel vindicated after I've been saying that I liked it while it went down from, you know, 180. I think I was saying I liked it at 180, so we're still down at 100 right now. But hey. Bigger question is, why buy Rivian at all? Much better companies out there. And yeah, I agree. And that's why I wouldn't, you know, that's why my portfolio is like 20% Apple, and I would buy like a little bit of Rivian, right? I weight my holdings based on my conviction on the companies, and Rivian would go way lower. I think right now, the answer to that question, Jay, is essentially just that I think it's a good risk-reward ratio right now. With how low the market cap is, I think you can make a value argument for it right here, you know, potential buyout, whatever it is. And then the flip side to it is that if growth comes back in favor at all, Rivian's a big beneficiary of it. So I think even in like the bear macro outlook, Rivian, I mean, don't get me wrong, Rivian stock will still go down, but potentially then if the company's holding $15 billion of cash and the market cap gets to $10 billion, I'm going to buy them out just to take the cash from them. It doesn't have that much debt, the company doesn't. And something's got to be up. Like I'm not saying like it's a no-brainer. I got to do some more DD on it. Take XPEV instead of Baba or instead of Rivian. I don't mind taking a stab at some of these Chinese stocks, because my theory going, I mean, you guys can watch however many of these shows as you want. Anytime we've talked about China, my my thesis has always been like there's all these risks being factored into the stocks that are dragging the Chinese stocks down. Risks like, that China's going to do this, going to do that the U.S. and China relations are going to fade, that China's going to invade Taiwan. And I think it's going to be just more of the same. I don't think China's going to risk our entire trade business agreement between the U.S. and China, and we'd all be kind of screwed if that happened. Not all be screwed, but the market would get, like Apple, Microsoft, everything would get tanked on that, not just Chinese names. But all right, I see our first guest hanging out backstage, Blaze from Hot Trades. Let's go ahead and give Blaze our very special intro and bring him on, Benzinga Live. What up, Mr. Blaze? How you doing today?
Yo, what's up, Aaron?
Yeah, I'm good. How are you?
I'm good. Thanks for having me on. It's a pleasure. I use a lot of your services, so it's nice to be on.
Hell yeah. Well, we use Benzinga Pro here on the show every day, as well as some other Benzinga resources. Before we get started, you want to go ahead and just give us a brief introduction, who you are, what you do, about your channel and everything?
Well, my name is Blaze. I am the host of Hot Trades, which is also a YouTube channel that does something very similar to what Aaron does. And I've been doing this for about 10 years now, talking about stocks and crypto and whatnot. What we do is a little bit different to what you guys do in the sense that we mostly stick to like momentum names. So a name like Vivos, for example, I see like K Crow talking about Vivos in the chat. We will talk about that, why it's moving and the levels and technical analysis. We try and stay away from not really. We try and stay away from like the short squeeze talk and whatnot, even though we do kind of dabble into that. But we try and just stick to a lot of like technicals, right? Technical analysis, because that's what works. So that's what we do, Aaron. On YouTube.
Hell yeah, I love it. I'm gonna go ahead and post that YouTube channel in the chat, and as you can see here, we try to do a mix here on Benzinga from different fundamental technicals, everything. Well, as far as are you watching any specific stocks right now? Do you watch the same stocks every day? What have you been trading?
I think we might be one of the channels on YouTube that rotates way too quickly. I mean, like my mantra and I've been kind of repeating this on the channel over and over the last week. Absolutely no diamond hands is what like I try and preach on the channel. I think what's happened in the last if we go back to like 2020 when like GME happened, something's gone wrong in like the whole retail mindset, in the sense that everybody wants to get in on that squeeze. It's like, oh my God, the stock is going to squeeze, the shorts have to cover, and blah 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 blah. That doesn't always work, right? So we rotate every single day almost, unless the stock still unless the technical is still again all good. Like if you're holding something and the technicals look good, absolutely, right? But we try and rotate every single day depending on, again, there's a new catalyst, there's news, right? So in the last 2 days or so, so yesterday we talked about JSPR. I don't know if you looked at JSPR, right? That stock rallied 600%, right? Today we have a name like Vivos rallying 300% because news came out, right? So we posted that in Discord around $1 and it's obviously done really well to $3. So we try and catch stuff like that with the catalyst or when the technicals align, right? So we rotate all the time. Just based
what was the
on,
first one you said? GTSB?
JSPR.
Oh, Jasper. Yeah.
Yeah, Jasper.
Yeah, so you're looking for a lot of these, stocks that have momentum behind them, like a lot of volume and momentum,
exactly.
huh?
Exactly. So, and
Awesome.
Carla was another one, right? Carla was one we talked about last week. That went from $8. It rallied all the way to $47, right? We covered that as long as the technical is still aligned. We talked about there were a few members in the chat, people like Hugh and Marshall and CC, a few members from Hot Trades. So these guys can maybe tell you a little bit as well.
Hell yeah. Well, welcome to anyone joining us from Hot Trades. Go ahead and smash the like for the man, Blaze. What about just, do you ever just look at, do TA on like the overall indices, the SPY, the Qs, are you ever watching those?
We do as well. I usually have multiple screens, and one of the screens I have is always on the S&P because as much as we cover momentum names, we also want to look at long-term investments, right? Names like Tesla. I mean, Tesla sitting at the level that it's sitting at, or Apple sitting at the level it's sitting at. I just heard you talking about like Rivian and Baba and all these names sitting at like extreme discounts, right? These are names you can like slowly dabble into for like and just scale into them for a long term portfolio or something like that, right? So I we look at the S&P quite a bit always, and Powell is speaking later, not speaking, but the Fed minutes come out later today, so that is something we will be looking at as well.
Yeah, the minutes come out at 2 p.m., so definitely looking
Yeah.
for a reaction there on the SPY. So Blaze, what are some tips you give to people who, join your Discord or start watching your videos who are just getting into investing for the first time?
Mhm. If you're new to this, my advice for you would be to stay away from the hype. Right? There's a lot of hype on YouTube. I watch Aaron once in a while, and or this channel in general. And these guys are very good in terms of like just technical analysis and giving you the information that you need to get right in any form that comes in. But there's information out there. There's Twitter. There's other YouTube channels that will make stocks look very appealing for you, right? Oh, this stock has to squeeze. The shorts have to cover this. The stock is going because of this and this. If you're new to this, like my biggest mistake when like I started this whole thing was listening to stuff like that, right? So watching a YouTube channel and someone telling me that this stock is going to $1,000 because the shorts have to cover and the math, it all makes sense. Like if you listen to like a video like that, it makes sense, right? If someone breaks down all the math for you, it makes a lot of sense. Again, my advice for you would be to stay away from all the noise, right? Look for the facts, right? Look for the actual information. Maybe learn to do a little bit of technical analysis, right? So again, make sure you look for the facts, right? If someone says a stock has to squeeze, you might want to, and the stock isn't squeezing, maybe it's not working, is it, right? So again, the mantra I've been preaching over the last few days has been, again, so no diamond hands, please and thank you. Like if you get into a position, make sure you have a stop loss. Like you want to take it to the very basics, right? Take it to the basics. Again, have a stop loss if you're new to this and you're in a position. Really understand like why you're doing what you're doing. Like if you're getting into a position, is it an investment, right? If you're getting into a position because it's an investment, okay, that's a different way of managing a position. Like if you're getting into a play because you're scalping it, right? That's another way of managing a play, right? Again, you want to maybe like less risk on the scalp plays, right? Again, stop losses and things like that, right? I will always advise people to like, again, I know Aaron is using like Benzinga trading view type thing there, right? Like look, like have a chart, like just open up a chart in front of you. Because if you look at charts, sometimes they have a way of telling a story, and this story is very repetitive, right? So if you look at this chart he has in front of him, you can clearly see that this chart is trending lower here, right? If you do a little bit of a downtrend, right? So you can tell that this thing is trending lower, and maybe this is some. I mean, like without having any background in technical analysis, you can tell this chart has a problem. I know you like Baba, Aaron. I know this is like one of your. But right, so again, and just things like that, the things that are going to be very obvious for you, right? So again, pull up a chart in front of you and just things like
Yeah,
that.
no, 100%. And yeah, Bob has been through a rough, wild ride, but yeah, I think having some understanding, charts. Everyone's gonna have their own way of looking at charts. There are different indicators they're gonna use, different strategies they like. But just learning some basic technical analysis off the bat is definitely something that is something that everyone should do. Well, Blaze, let's see if we've got any questions in the chat. But it's great to get you on the show, and I'd love to have you start coming on the show, more regularly. Maybe like once a week or something. We can have you come on and get some updates from you on what stocks you're watching and everything.
Yeah, absolutely, I'd love that.
Awesome.
Yeah.
Let me go ahead and share the Hot Trades channel in the chat. Let me just make sure. I want to make sure I got the right one because it says that this channel's live right now. Are you live just running like a screener on there?
Yeah, just running the S&P and Carl, one of the stocks we're watching.
Oh, okay, beautiful. All right,
Yeah.
so this is the right channel then. All right, guys, we'll go ahead and give Blaze and Hot Trades, go over there and give them a subscribe. Blaze, you got any questions for me? Anything else you want to chat about?
What's your I don't know, just to talk about the market maybe. What's your outlook on the market going forward, just into the new year maybe?
I think I gave kind of my bold take price prediction on SPY by the end of the year. I think I'm a lot more bullish than most people are right now.
Yeah.
Not necessarily in the sense, Blaze, that I think like, oh, everything's going to be great and perfect. I just
Hmm.
don't think all of the things that people are worried about are necessarily like as bad as they will end up being, if that makes sense. Like I think if we do see a technical recession, like lower GDP in the first 2 quarters of the year, I think it'll be another like very mild recession.
Yeah.
And I think we may be closer than some people actually think to cutting interest rates or having the Fed stop raising rates altogether in terms of inflation coming down a lot and all these things. So that's kind of my outlook. Is I'm like, if 10 is as bullish as you can be,
Hmm.
like COVID 2020 markets when everything was just going crazy, and a 1 is as bearish as you can be, like '08 market crash, I'm probably like a 7. So
Yeah.
I'm
Okay.
I'm 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 bullish, but not super bull, if that makes sense.
Okay. Okay. Yeah, I like that. Devin, I somewhat agree with you. I think the next few months might be a bit of a struggle, like going into the fall or the spring or whatever month you guys call it. The next 3 months or so. But I think these are some nice. I mean, like if you try and if you pull up a historical like S&P chart or just like overall chart of the market, I mean, these are some pretty nice discounts we're getting. And in the long run, we will be like back to highs on highs on highs, right? You look at that S&P monthly chart, that's quite a dip we've had. Like if you like COVID, I mean, I don't want to compare this to COVID because it's not the same thing, right? Um, but you compare that,
Yeah,
that's
it's
right.
similar in terms of percentage drop for sure.
Yeah,
All right,
exactly.
Blaze. Well, we've got that channel in the chat again. Looking forward to having you on the show again sometime soon. But everyone, go ahead and check out Blaze's channel. We'll chat soon, man.
Absolutely. Thank you for having me, Aaron.
Of course. All right, guys, that was Blaze from Hot Trades. Link to his channel is in the chat. Go ahead and check that out. As always, if you've got stocks or trades you want to check out or discuss, any news items, let's go ahead and just drop them in the chat. Before we get to our next guest, let's go check out benzinga.com, talk about some of the top headlines of the day. This is a good one, actually. Why is RIP Twitch trending on Twitter? So Twitch... that focuses mainly on game, Call of Duty, is currently in the public eye, is trending on Twitter. Why? Because the live streaming service is one of the most popular. Is experienced malfunctions. Okay. So people were probably just upset that they weren't able to watch their favorite streamers. Doesn't sound like that big of a deal. But I did see that on Twitter earlier and was worried about that. McCarthy, the Speaker House, I think they're going to do another vote today, maybe? Yep, soon. House to take 4th speaker vote as McCarthy's path unclear. I don't know I don't think the market honestly really cares about that, to be honest with you guys. We talked after the midterm elections about historically what the market tends to do in times of, when different parties control different branches of the government. And actually doesn't really matter Republican or Democrat, but anytime there's a mix of power, the market historically likes that. I think it shows, well, actually, I think it's a couple things. I think part of it actually is that it makes it harder for a lot of bills to be passed. So part of it is like the theory is there will be less regulation if there's like gridlock, which is good for business. I don't really know. So again, I don't think the market really cares that much about the vote. Market cares way more about the FOMC minutes coming out at 2 p.m., which we will do a preview with that. But it is almost 12:15. Joe Swaba said he's here to thrust safe trading, everyone. All right, man. I don't know what that means, but more power to you. Safe trading, Joe. I see our next guest hanging out in backstage. We got Joseph Hogue. I think I'm hopefully saying his name right. Might be Hoagie. We'll ask Joe, but I think I got it. Joe is a CFA, certified financial analyst. I think that's what that stands for. Yeah, chartered financial analyst. Sorry, Joe. Before I screw anything else up with Joe, let's just go ahead and give him our special intro and bring Joe on the show for the very first time ever. Let's give him that intro. Mr. Joseph, how bad did I screw up your name?
Actually not bad at all the first time, and then
first time, okay. Then I went
down the slope there.
Oh man, I hate when I do that. That's why my teachers have always told me, growing up, when you're taking a test, just go with your first gut.
Answer. Yep.
Don't I
don't know. I'm still more interested in. I'm still following Joe there. That was thrusting in the comments. So not sure what that means either. But hey, let's go with it.
Yeah, I mean, yeah. If he's doing that, I'm glad he's leaving. So, but Joe, we've got the better Joe on this stream now. Anyway, so Joe, give us a brief introduction of what you do, your channel, and if you can, let me know what a CFA is. I'm always confused between a CFA, a CPA, all this stuff. All these acronyms. I don't know.
Sure. Well, I come from an equity analyst background, worked venture capital as well as private wealth management for quite a few years. 2014, decided I wanted to go out on my own, started blogging, that kind of thing, and then just really reached out into YouTube in 2017. Growth has been exponential. I love building the community there on Let's Talk Money, the channel over there. And it's really just because, being able to bring that equity analyst background to just Main Street investors, be able to talk to the people that I know best. Chartered financial analyst, the CFA designation, is more of the equity analysis side of the house rather than kind of wealth management or what you usually think of like a CFP, which is certified financial professional. Those are the people that work directly with clients as far as insurance and planning and those kind of things. So a little bit more of a financial planner on that side. Equity analysis with the CFA is more of the we're working for the Goldman Sachs and the JP Morgans and analyzing stocks and that kind of thing.
Got it. So Joe, when you say you're doing equity analysis, is that a lot of like fundamental analysis, kind of like Benjamin Graham stuff?
Sure. It's mostly a fundamental analysis. What I like to do is really start with that top-down picture, the macroeconomic, the longer-term trends, really trying to find those big picture forces that are developing over the next 10 years, really going to change our lives. Start from there, right? Because it is, how do you pick one stock out of the 5,000 traded in the U.S. markets? It's impossible. What you do instead, you look at those longer term forces, the electric vehicles, you look at demographics, you look at e-commerce, those big picture ideas, drill down from there into, maybe a sector or an industry that's going to benefit from that. And then, you've only got maybe 100 stocks to choose from in those themes. So it makes it much easier to pick one. But also, all those stocks within those themes are going to get that boost over the next 10 years from those major growth themes. So it not only makes it easier to pick stocks, but you're going to get pretty decent returns just on that major theme anyway.
Got it. So are you writing reports on stocks like you would see like an analyst at JP doing?
Mm-hmm. I used to. That used to be. I set up the sell side department for a venture capital firm in Canada. We put out sell side reports on stocks, things like that. Now it's mostly just the shorter form content. The videos, 15, 20 minutes long, videos covering a group of stocks. Some of those longer term themes, why I think those are the growth trends to be in over the next decade, things like that. So a little bit less intensive than your 20 or 30 page analyst reports that I used to do.
And so just for our audience, for when you say sell side, what exactly do you mean there?
Sure. Well, there's two types of analysts that work on Wall Street, really. You've got the sell side and then the buy side. Buy side is going to be internally working for the portfolio managers. They're going to be doing the analysis, telling the portfolio managers, okay, which stocks to put in these portfolios, which stocks I think are going to do best. Sell side, those are going to be a little bit more media facing, right? Whenever you see an analyst on TV or giving an opinion in something, they're probably a sell side analyst, because what they're doing, they're trying to use their opinions and their analysis as a marketing drive for the company, to bring investors in to trade with their brokers and make those commissions, that kind of thing. So very, very similar. It's the difference is probably just semantic for most people.
Got it. So Joe, you mentioned we've got different trends you're watching. What's kind of been top of mind right now? I mean, it's I feel like things have been shifting a lot, right? Like 6 months ago, a year ago, we were all talking about semiconductors and supply chain issues, and not really talking about that a lot right now. What's been top of mind for you?
Sure. Well, obviously, the macro story with the slowdown in the U.S. I think China's probably on the other side with stimulus and lower rates. So that macro story is a little bit different. So you've got the China story, you've got the rest of the global economy slowing down. So you've got ad spending. I know has been a big one for all of the streaming stocks, the social media stocks, search like Google, things like that. So really following how advertising is developing, as it relates to those stocks. I think e-commerce is still a very strong growth trend. Obviously, e-commerce is still only about 15% of total retail sales, expected to grow to about 21% by 2025.
Is that in the United States or the world? Sorry.
That's in the U.S. E-commerce.
Oh wow!
So less than about 15%, less than a sixth of total retail sales, expected to grow to still even at a slower pace than what we've seen during the pandemic and before. Still expected to grow to 21% by 2025 at right around $7.5 trillion total retail sales by 2026. That's still $450 billion in additional spending, online, e-commerce, right? So you look at, who's going to benefit most from that. Where you see Amazon, obviously the leader in e-commerce. We've actually seen them recently pick up advertising revenue as well against, Facebook and Google, those other traditional leaders in advertising. So you look at something like that, e-commerce. Which has slowed down because of the slowdown, but is still a growth trend. Things like that. Obviously, electric vehicles is a longer term trend. Electric vehicles still something like 2.5–3% of total vehicle sales. Obviously, that's growing very quickly. But I think where it's uncertain who's going to get those extra vehicle sales, right? Whether Ford and GM and some of those legacy makers are going to be able to take more market share away from Tesla or not. It's really uncertain. What I like to do in that trend, that broader economic force, is look at what we know. We know there's three times more copper used in electric vehicles versus traditional cars. We're going to be at a supply deficit within a couple of years, within maybe 1 or 2 years in copper. Because of that, we're going to be in a supply deficit of lithium for the batteries here in the next couple of years. So if you're looking at that broader, that big force trend there, as far as EV, then you've got to look at lithium, you've got to look at copper, you've got to look at maybe even some of the charging stocks, things like that.
Yeah, I mean the copper situation is one that I've been watching, and I mean now I feel kind of silly because I've missed out on this move. I'm just looking at Southern Copper right now. I'm sure there's some other like copper ETFs are looking at some futures, but we've seen a move here now from $50 to $62, but still trading below its highs. And like you said, kind of that macro trend that I've heard a decent amount of people talking about that anticipation that copper is going to become more and more valuable as these electric batteries become more commonplace, cobalt as well, in addition to lithium and some of the other metals that are out there. Definitely, I think trying to identify trends like that, Joseph, is something that I find really interesting because it's you have kind of the storyline behind it too that makes as an investor a lot more tangible than just saying I'm buying X stock because the PE ratio is this number and this, saying having this kind of storyline and tangible trend to me makes that investing, I don't know about easier, but maybe more enjoyable, if that makes sense.
Sure. Well, I mean, it also gives you just a little bit a higher degree of confidence, right? In that, if you know that the whole copper infrastructure, or the copper supply theme is going to lift all the stocks under that, then you're going to have that tailwind no matter what stock you buy. Whether it's Southern Copper, whether it's FCX, Freeport McMoRan, whether it's even the fund, the COPX. You're going to have that tailwind behind those, so you're going to do well, whether you pick the best of the best stock within the industry or not.
Got it. So Joseph, while I've got you here, because I basically found this out earlier, I'm kind of curious. I'm sure there's a very decent explanation here that I'm missing. But so I'm using my Benzinga Pro right here. That's our platform here at Benzinga that gives us access to a lot of data from companies. So I'm looking at Rivian stock right now, and you mentioned electric vehicles. So I noticed today Rivian on its balance sheet has about 3.7 billion in liabilities, 13.3 billion in cash, 19 in total assets or equivalents, and the market cap is 16 billion. What's a good explanation for why a company, the market cap would be trading essentially below its total assets, given that it doesn't even have that much debt or liabilities?
Sure. Well, I don't cover Rivian. What I can tell you is that obviously the EV, the makers, the electric vehicle makers have really taken a plunge, especially since those poor production numbers by Tesla. We are seeing a very, very quick slowdown in the electric vehicle demand. Especially in China, where not necessarily a slowdown in demand, but the domestic producers like NIO and that are really taking a larger share of that pie. So, people are looking at the U.S. makers, especially exclusively the EV makers, so Tesla and Rivian versus the legacy makers like Ford and GM. They're looking at those focused EV makers and obviously re-rating those lower on a price to sales, price to earnings basis. As if you're looking at the balance sheet, I would rather look at something like cash on the balance sheet and then cash burn. So if the company isn't is free cash flow negative right now, how much of a runway does it have as far as cash on the balance sheet? The long term, I would rather look at the long term debt rather than just total liabilities, because that total liabilities obviously has that current liabilities that are going to be paid within the next year anyway. So that's really not quite a factor. For Rivian, I can tell you it's got plenty of runway. It's got plenty of balance sheet strength to guide it through this. But it will be a rough first or second quarter, as the economy in the U.S. slows down, people kind of rethink those big ticket purchases like vehicles, and you're going to see some weakness. I think some further weakness in electric vehicles.
Yeah, and again, I think there's always a reason. Anytime, like if you're looking at a stock and it's like, oh my God, this thing looks like the best deal ever. It's like the market's not stupid, right? There are a lot of smart people out there on Wall Street with a lot of money. So if there's something trading at a huge discount, typically there's a reason behind that. And I would implore anyone looking at one of those stocks to figure out what that reason is. So thank you, Joseph. Sure. Mentioning there just that, this slowdown that's anticipated in the second quarter, how much of, what would you give any credence to the idea that like everyone is essentially talking about this slowdown, that essentially it's going to be becoming like a self-fulfilled prophecy? Like people are like cutting costs to anticipate this slowdown, and then because they're cutting costs, like growth's going to slow. It's like if everyone's gearing up for this recession, and then could that almost cause the recession?
Sure. Well, business and management always has to be forward looking. So they're looking at, what is happening to the economy and obviously what people are talking about, and they have to guide their business decisions as far as capital spending, employment, that kind of thing. So yeah, there is some truth to that. I would say, if you just look at the numbers though, it doesn't necessarily even rely on people talking about the recession. The recession is developing, whether people are talking about it or not. We just saw marketing or manufacturing activity posted today, contracted for the second straight month. We've seen, just look at the Fed interest rates. Fed raised interest rates for the quickest pace in 40 years over the last year, right? From nearly zero to over 4%. So quickest pace in 40 years. They haven't slowed down yet. We're still expecting another 0.5% raise in February, and that hasn't come through into the economy yet. Typically the economy takes at least about 6 months to really react to increases in interest rates. So we're going to see the economy still developing or still evolving into those higher interest rates through this first half of the year. So we're going to see, higher unemployment. The Fed expects unemployment to rise by at least 0.8%, so almost 1% rise in unemployment. That has never happened. That shift, that level of increase in unemployment has never happened without a recession, right? So I think the market is still, hopefully complacent that we avoid a recession, but it's not going to happen.
I hear you, and I think I guess like my point is, I guess like for the manufacturing and stuff, like that's on the business side. Yeah, you're seeing businesses slow down because the Fed's raising interest rates and stuff. But on the consumer, like the U.S., we had more holiday sales this year than last year, and that's with inflation higher. Everyone talking about this recession, and it's just like, to me, and to the jobs, that like the jobs number that came out today was a little bit hotter than expected, and that's I think been surprising to Powell and a lot of economists that we haven't seen a really substantial uptick in unemployment as the federal interest rate has risen. And obviously the market doesn't like that because it means the Fed can keep raising, or it gives them more ammo to do so. But that's, where I kind of get caught up, is like everyone's talking about this like huge recession that's coming, and it's like, why? Jobs numbers are good. Are the economy's showing that it's stronger than almost anticipated, that's able to withstand these interest rates coming up while inflation is falling. Like almost the more that happens, the more that we see unemployment stay steady, not increase, but inflation continues to fall. To me, that seems to mean that we're getting like closer to a softish or a softer landing being possible. But it does, like Powell doesn't seem to think that way, which is where I get a little confused on that.
Sure. Well, and you're right. The inflation is moderating. We actually got some good news on rent inflation from the Cleveland Fed just recently, that shorter term rent costs are coming down, or are decelerating as far as inflation. So that's good. The jobs numbers actually not quite as strong as we might have been led to believe. The Philadelphia Fed actually revised the second quarter jobs numbers down by 1 million, right? So
wow.
They had initially reported that in the second quarter, those 3 months of the year last year, that jobs increased by 1.2 million, right, over the 3 months. And they actually revised that down to just 10,500 new jobs added over those 3 months. So jobs not nearly as strong as we might have been led to believe. I think that's going to start showing up. We had very weak retail sales numbers in November. Haven't seen the December sales numbers yet, but just those weak retail sales numbers in November lead me to believe that maybe retailers weren't hiring quite as much for their holiday shopping spree. They did have to do a lot of discounting. You're right on that. I think a lot of that discounting and the sales was simply a matter of their inventory. We saw huge inventory buildup in retailers over the last few months, and they had to get rid of it. They just couldn't keep it on their shelves anymore. So we did see pretty steep discounting from retailers.
Right, and we've seen. I mean, we've been hearing about inventory problems for a while. If you go back to Target, when Target had that huge drop right here in May. But what was interesting to me, what stuck out to me about when Target announced this May 2022, the stock dropped 25% on Target, right? That's not like a Rivian or a growth stock, but a quarter of its market cap wiped out in a night because they announced inventory concerns. But the CEO said, we still see a resilient consumer. We haven't seen a slowdown in traffic. What we've seen is a shift in how the consumer is spending money, right? We're having inventory problems with TVs, with electronic, all these things that people bought a lot of during COVID. And then now he was saying people are buying more clothes, more travel gear, all this stuff. And so I think when I see like Tesla say demand and Apple saying like demand's falling, that's like one thing. And then, but if those people are spending that money in other places, then that might, that might just be that kind of the cyclical nature of how people spend money. We'll see. Sure. I do think we will see, I guess what could be technically a recession in maybe like the first 2 quarters if it's negative GDP. My stance, and this is I'm nothing really backing up, just my personal opinion, is I think it'll probably be more mild than what a lot of people anticipate, or at least I hope so. That's what kind of my hopeful, wishful thinking.
Yeah. The consumer is strong, and I think there's a lot to say about that shifting, shifting away from maybe the big ticket items, goods, cars, big expensive iPhones, things like that. What we've seen is, with Target versus Walmart, is what we've seen that, Walmart with the grocery, the greater percentage of grocery sales that have held up, they're being able to bring people into the store for those grocery sales and then, get them to buy other things. So that's why I think Walmart has held up a little bit better than Target, where maybe has a little bit lower percentage of sales. I think Target percentage of sales for groceries is something like 17%, whereas Target or Walmart, it's much higher. It's closer to 25-30%. So the consumer definitely is shifting. They're still fairly strong. We still have about $1.2 billion or $1.2 trillion, I want to say, latest estimates for what consumers still have saved aside, from the pandemic. So consumer is strong. Unemployment still at historic lows, 3.8%. So even if it does come up 1% or 1.5%, it is still very much lower than what we've seen in any other recession in the most recent past. So consumer is still going to be strong. It's just going to be that change, right? That change from what we've seen over the past couple of years and the consumer spending, because people got free money basically.
Yeah, and I mean, I think it's always important too to that there's like a distinction between talking about like the market and the economy sometimes. Sure. And like the market, I think will look a lot different. Like I don't think we're gonna see every single tech stock making all-time new highs every day, like we saw basically for the past like even after COVID, but before COVID too, just Apple and Microsoft, always big. Like, I don't think the market will really look like that, at least here soon. But again, I still think like the U.S. economy to me has shown a lot of resilience. The consumer has shown a lot of resilience. And the flip side to that is, okay, that means Mr. Powell and the Fed can keep raising rates because they know how strong the economy is. So for the market, that might not be great. But I think, for how certain essentially everyone was that like huge recessions come in, it's actually, if you look at the overall macro picture, probably looks a lot better right now than it did say 6 months ago when inflation was still at 9% or whatever. And then the other point I was going to make real quick, Joseph, is just that, because you gave the Walmart to Target. One thing I have noticed as inflation's picked up and there has been some concerns among consumers is that kind of among peers, it seems like the cheaper alternative has held up a lot better. One that I wrote about recently was in the cosmetic space. If you look at like Elf Beauty, which is a cheaper makeup brand, is at all-time highs. Whereas if you look at Estee Lauder, which is a more luxury, expensive one, is like getting crushed. And there's some other retail stores that are like that, kind of if there's a luxury one and then the cheaper one's held up. And looking back in 2008 and stuff, like dollar stores and stuff like that held up really well during recessions.
Yeah, absolutely. People want to go where they get more bang for their buck, right? If they're worried about, potentially losing their job or seeing that inflation eat away at their real purchasing power, then they're gonna go where they get more for less.
Yeah, 100%. And that's what I was, kind of anticipating, and it's held up. So Joseph, this has been a great discussion. And before I let you go, I want to give you an opportunity to kind of talk about your channel. For a second, exactly what type of videos you're posting, what kind of value do people get from subscribing to your channel?
Sure. Well, love to see people come by, join the community, the Bowtie Nation there on Let's Talk Money. It tends to be a little bit longer term thesis, right? So we're starting with those big picture trends, those, 5-10 year trends in stocks. So not necessarily the trading, the short term trading, but, trying to find those best stocks that are going to really grow your money and grow your portfolio with maybe a little bit less risk, a little bit less stress over the next 5 or 10 years.
Yeah, that's awesome. And guys, there are a lot of people, I'm sure as you guys are aware watching us on YouTube, there are a lot of people on YouTube posting videos about money and stocks. Not a lot of them are CFAs. So, if you're looking for some good sound, advice, head over to Joseph. So Joe, do you have any ambitions or wishes to like run a fund, do anything like that? Or are you very content just, making videos for folks on YouTube?
I love doing what I'm doing. Really while talking with Main Street investors and being able to connect on that level. Spent more than enough time, running venture capital and private wealth management. Only being able to work with that top 1%, the wealthy earners. So I love where I'm at, and I'll continue to do that.
Did you like make enough money working in finance to just not have to worry about it, or do you make a decent amount of money monetizing the YouTube channel?
Oh, I mean, the YouTube channel does great. Over 500,000. 500,000 could do. It does really well, but yeah, coming from venture capital, you really never have to worry again. So if you're raising your kids, get them in venture cap.
Well, that's awesome. And again, Joseph, this has been a great discussion. I hope you're open to joining the show again sometime in the future, because we have a lot of guests come on, but it's good to get someone again with a CFA that knows what they're talking about, and obviously you have a lot of experience.
Sure. Yeah. Love to.
All right, man. Well, I'll drop that link to the channel in the chat so you guys can go ahead and subscribe to Joseph's channel. Let's Talk Money. Joe, thank you again for hopping on the show today. Hope you enjoy the rest of your Wednesday and week.
Thanks, Aaron. You too.
All right, guys. That was Joseph Hogue. Let's Talk Money. Dropping that link in the chat. Really good discussion. I like being able to kind of bounce different, ideas and theses off of each other. But yeah, you can tell Joseph knows what he's talking about. A lot of different people out there on YouTube that don't know what they're talking about, posting videos about stocks and buy this and buy that and buy Tesla, this and that. And, so mix some videos from Joe in there to mix it up or something. Similarly, we've got another guy that knows what he's talking about and talks a lot more about kind of long-term stuff, less just like day trading and pump and dump stocks like that. But I've got Ryan Williams hanging out backstage. Retire with Ryan. We're going to go ahead and give Ryan our very special intro and bring him on the show because I've kept him waiting way too long. Sorry, Ryan, we've kind of run behind the show schedule today. I'm sure you get how it goes sometimes if you're streaming and doing shows and stuff. It gets hectic sometimes. But let's give him our welcome and bring Ryan on. Mr. Ryan, welcome to Benzinga Live. How you doing?
I am living the dream, Aaron. How you doing, man?
Hell yeah, love to hear it. I'm doing well. So before we get started, you want to give yourself just kind of a brief introduction to our audience, who you are, what it is you do, what's on your channel and all that?
Yeah, so my name is Ryan Williams, hailing from you today over here in Las Vegas. And I just have a YouTube channel where I talk about dividend stock investing. Most of my videos, we're talking about cheap dividend stocks. We're talking about good ones to buy, kind of like you said, for the long term. And, I'll throw some videos in there about my portfolio, what I'm buying, which dividend payments I'm getting every month, stuff like that. So it's pretty simple.
So the channel's called Retire with Ryan. Is that correct? Sorry.
Well, kind of, sort of. My YouTube channel is just my name. It's just Ryan Williams, but I have an
email sorry, not
newsletter.
The channel.
No, it's okay. But I have an email newsletter, and I've got just a website, Retire with Ryan. And so that's just kind of my whole branding, I guess. In doing all this dividend investing, I'm just trying to retire early. I'm trying to get out there and just live off my dividend income at some point. It takes a while, but with each week, with each new purchase, with each new dividend payment coming in, we're getting there step by step.
Yeah, and that's awesome. So I was curious just about, in terms of like everyone's got different retirement plans. Is your kind of primary like advice to people, like if you want to buy good dividend stocks in your retirement portfolio?
Can you say that one more time?
Sorry, I was choking on something. Is your like primary advice for because everyone's got different retirement plans? Is it mostly primarily revolved around like buying good stocks, buying good dividend stocks that will allow someone to retire?
That's what I think. And obviously everyone's got a different strategy. Everyone's got a different approach. And at some point it's just a matter of preference. But I know for me and many of the investors that watch my channel, we like buying those dividend stocks because we like getting that cash flow on a monthly or a quarterly basis. And kind of the thesis, as I'm sure you know, is that over time, hopefully by buying every week or buying every month, getting those dividends, reinvesting them, at some point that dividend income is going to be built up enough to be able to replace your active income from your 9 to 5 or however else you're making money. But that's kind of the goal, is just to replace your active income with passive income from dividend stocks. Does that make sense?
Yeah, 100%. And I'm in agreement too. And that's just what I was curious about, because I didn't know if, part of your, I guess advice or retirement planning advice to people like included all these different things. Because I'm always just like, why not just buy good stocks and you don't have to do anything else? You know what I'm saying? Like, it's always like, I think people get sometimes too crazy with their plans when to me, it's like sometimes simple, not that it's like super easy, but just sometimes simpler is better.
Yeah. And like I said, man, it at some point it comes down to a matter of preference. Like I know, prior to me coming on, prior to Joseph, you guys were talking a lot about technical analysis, which is by just kind of a sidebar, not my forte, but some people are interested in that. And so I also think that you need to kind of invest based on what fits your temperament. And I know for me, this works just fine.
Yeah. So let's talk about, and I'm going to pull up my Benzinga Pro. I'm sorry, there will be some charts on there. But let's talk about some of the stocks right now that I mean, in terms of being a long-term investor, in terms of looking at stocks that are going to pay a decent dividend for a long time, like now's a really good time, in my opinion, to be looking at some of these long-term names. What are some of your faves?
Well, I don't think you can go wrong with companies like Procter and Gamble, which owns other brands like Tide detergent, Crest toothpaste, Dawn dish soap, tons of different brands like that. I don't think you can go wrong there. Maybe not the best valuation. So if we're talking about ones that are maybe at a more attractive price point, I personally have been looking at companies like Tyson Foods, which hands down makes the world's best chicken nuggets. I got some in my freezer right now, but something like Tyson Foods. I'm looking more into Kroger, ticker symbol KR, which obviously they've got their own grocery stores, but they also own tons of other regional stores around the country.
Yeah, I think they recently just bought another regional chain. I forget which. Maybe let's go into the news feed here, see if there was a recent acquisition or not.
So I know here in Vegas they own a line of grocery stores called Smith's. Up in Oregon, there's a really popular chain of grocery stores called Fred Meyer. They own Fred Meyer. In Southern California, you've got Ralph's, which I don't know if you guys have ever seen The Big Lebowski, but there's a scene where he goes to Ralph's. Big deal in Southern California. They also own Ralph's, and then some others, like I said, around the country. But
I think this is what I was thinking.
Oh, go ahead, man.
Sorry, there's so they're trying to buy Albertsons, which I don't know exactly where regionally Albertsons is big, but I know it's actually a pretty big chain. Albertsons is, and I guess they have a deal, but there's some uncertainty surrounding the deal right now, so we shall see.
Okay. Yeah, and to be honest, I probably need to read more into that. The few times I've talked about it recently on my channel, people bring that up, and I have yet to dive deep into it. But also, in addition to those names I just mentioned, I don't think you can go wrong with certain ETFs, exchange-traded funds, like VU, the Vanguard S&P 500 ETF. They also pay a dividend. SCHD is probably I call it the holy grail of dividend ETFs. It's hard to beat SCHD if you're looking for a dividend ETF, but there's so many different ways to skin the cat. And I know for me, part of the fund is finding these different companies that I think are going to be good holds for the long term. And you also can look at ones like Apple or Microsoft, both of which have come down in share price, certainly in the last year. So those might be good ones to look at as well.
Yeah, 100%. So, I mean, in terms of what would be, I guess, is there a scenario where if you made enough money, you could be essentially just have all your money parked in VU and just living off the dividends? Would you advise someone to do that or no? Because you want to be reinvesting those dividends, correct?
Yeah, and I guess the train of thought is you reinvest the dividends until it's able to replace your active income, and then at that point you can kind of switch gears and start taking some of those dividends and using that to pay bills, or taking all of it to pay your bills. And the good thing too about many dividend stocks is, I'm sure and a lot of your audience already knows, is that they tend to grow over time. So if you're investing in good companies, many of them have dividend growth histories that extend for decades. Like Procter & Gamble's been growing their dividend for 66 years, I think. So definitely over 60 years. Lowe's, which is a very high growth dividend stock, is sitting at 60 years of growth. So, if you reach a point where you're able to replace that active income off a certain amount of dividends, whatever it is, the good thing is, ideally, if you're investing in good companies, the following years or the years that follow, you'll be generating more income, which you can then use to just pay yourself more every year, or use that to reinvest back into your portfolio and keep that snowball growing. So like I said, there's so many different ways to skin the cat.
Yeah, and I mean, everyone's going to have kind of their own different preference, different style. Like you said, someone might want to build a portfolio where they own Apple and Tyson and Procter and Gamble and different stocks, or you might just want to buy VU and not have to worry about it. And honestly, there are some pretty crazy statistics out there about the percentage of even professional money managers, how few of them end up beating the S&P 500 or beating VU. So that's why, to me, it's I always think if I won the lottery or something, I would quite literally just buy a bunch of VU. You'd make so much off the dividend. Like you just wouldn't have to like it really is. It's not simple getting that much money, but once you have that much money, it kind of is like that simple in a lot of ways. But aside from if you have every penny you have in VU and there's like a 50%, I guess depending on how much money you have, even if the market crashes 50%, you'd be fine if you just keep holding.
Yeah, sure, man. You can just VU and chill, as they say. And the hard part too, like you said, is acquiring enough money to be able to get to that point. And that's, for many of us, that's something that happens over time, unless you are lucky enough to, like you said, win the lottery or just come into a substantial amount of money. But you know, it's something that happens brick by brick. It's definitely a slow process, which I think is a turnoff for a lot of people, and I think it's something that keeps them away from dividend investing, which is understandable. You definitely have to have some patience, but you know, if you do have a good long-term mindset and you're willing to be patient and just follow the process and stick to it for, unfortunately, a matter of decades, it will most definitely pay off in the long run. So I know for me, it's a trade that I'm most definitely willing to make.
Yeah. So Ryan, is this something you talk about where, you know, it's again, not that none of the investing stuff is simple, but like in theory, right, you know, we can pick out stocks that are look like decent values and pay good dividends, or just say, hey, we can just buy a bunch of VU right now. It's down 20% from its high. It's probably a good investment. All that stuff, like I can do right now, no problem. But what about, you know, just in terms of building the discipline to, you know, not spend, you know, to start saving more money so I can increase like more to my retirement accounts? Like to me, like that's the real hard part about planning and setting yourself up in a good position for retirement, is just having the discipline to say, you know what, no, I'm not going to go on that trip with my friends. I'm going to put that, you know, $500 into my investment account, or like whatever it is. Like, how do you teach your students or people that watch your videos how to instill that discipline?
Gosh, man, that's a really good question. And I can't speak for everyone that watches my videos, but I know that there's many people who get into this style of investing where once you get into it and you start to see those dividend payments coming in, something starts to click. It's like a light bulb goes on and you realize, hey, you start to realize the real potential of what it can be down the road. And so then it just becomes kind of a game, kind of like you said, how can I do more of this? How can I do more and do it faster just to keep this, really expedite the growth of this snowball? And so I just think naturally a lot of people, once that light bulb starts to go on, they get inspired and they get motivated to find ways, like you said, to increase their income or reduce expenses in some other way to contribute more to their portfolios. And I know it's kind of a running joke for a lot of us in the dividend investing community. It's that like a lot of us try and live like hermits just so we can put as much as we can into our portfolios, just because we have so much fun doing it. And it's, I don't know, there's something really cool about making money not having to lift a finger that I think gets, you know, really hooks people in once you get going. But
yeah, and that's what's
to answer your question. I'm sorry, man. I know it kind of a roundabout answer. To answer your question, like what do I tell people looking to increase their income or reduce expenses? I mean, obviously there's so many ways that we can reduce our expenses, right? But as far as increasing your income, like if anyone's really curious and is serious about doing that, I recommend something like a YouTube channel or a podcast or a newsletter or a blog to anyone. Because it's so much fun. I'm sure you have fun making these videos just as much as I do, and you never know what they can grow into, and they can all, you know, if you grow it to a point, it can be a good way to make some extra income that you can put towards your portfolio, or even replace your active income, your 9-to-5 income, sooner than later.
Yeah, I mean, I see so many kids that are like, you know, younger than me, 20 years old, making, you know, X amount of money on like their YouTube channel. I'm just like, what am I doing? Like, I gotta start doing that. But I think a lot of people have, you know, and like you said, it's you can potentially grow that into something you can monetize. You know, it's hard, but I love the idea of, because like how I said it, like how, you know, it's my example was like not going on this trip with my friends. But you spun it in a way different way of, instead of like cutting money, like why not just try to make a few extra bucks so you can do all that stuff? Because I actually don't love, like the one thing I guess I kind of dislike about all the different like money, you know, kind of like grind set, like people on like Twitter and stuff, is it's like look, like not everyone, you don't have to, buy a house at 25. Like if you want to spend money and like go out on vacations and like live your life in your 20s and have fun, like do it. You don't have to feel bad for doing that. So instead, I like that idea better of trying to get some extra income so you can do these things and also invest in your account and also plan for retirement. Not how do I live like a hermit and just so I can be, investing an extra, $50 this month into VU.
Yeah, I couldn't agree more, man. And I think where a lot of people go wrong is that they're not having their carrots before they have their dessert. They're not investing in their portfolios before they go on the trip. They're not getting their work in before they play. Does that make sense? So I think that there's a big prioritization issue when it comes to finance. And I think it helps being able to have these channels and make these videos and talk more about this stuff, because over time, hopefully more people will catch on and that mindset will start to change. But I totally get what you're saying, and I agree.
Yeah. And I have, I have friends that like reach out to me that are, we're a few years out of college now, so they might finally start having like a few extra bucks, and they'll talk to me about investing. And I basically tell, like, I was like, not that this is what you like want to do forever, but I'm like, start by just opening an account wherever you want, and start a recurring investment, however much, $20 a week or $50 a month, whatever it is you can afford, like into VU or into one of these like ETFs. And like you said, you'll see over time, it's not going to be much, right? If you do $50 a month and for 3 months you buy, say you have $150 worth of VU, and after the quarter they pay out the dividend, it'll be like $1 or something. But what you're saying, Ryan, is just seeing that like dollar coming in and just being like, oh, holy shit. Being like, now I know if I keep doing this and VU's value keeps increasing, soon that dollar every quarter is going to be 5. Then it's going to be 10. And then before you know it, it's going to be like 300, right? And then before you know it, it could be paying for your car insurance every, 6 months. And then, so even starting small, I get that notion of how just seeing that dividend come in can like make something click in someone.
Yeah, man. And I always compare it to kind of working out. Like, you don't walk into the gym on day one and just put 225 on the bench press and get right to work. Like, you got to start with just the bar, build up a little strength, and then over time you're able to work up to those bigger numbers. It's the same thing with dividend investing. At first the payments are not going to be super exciting, a few cents, a couple bucks here and there, but it's going to grow into something larger sooner than you think. Like, for example, I've only been doing this for maybe about 3 years or so now, and I started from scratch right at zero, and just in a short amount of time, just the last couple of years, which really in the grand scheme of things is not that long, like this last month I made over $200 just from my dividend portfolio, not having to lift a finger, which still is like, I'm not going to retire off $200, but my goodness, it's so much farther than where I was a couple years ago, and so it can happen a lot sooner than you think.
100%, man. Well, Ryan, we are coming up at 1 p.m., which unfortunately means it's getting time for us to end our show. But I do want to I'll pull your channel up real quick and see, so folks can see it on here. And I'll drop the link in the channel if people want to check that out. But is there any, topics or anything, you wanted to touch on that we haven't gotten to already?
No, man. I appreciate the opportunity to have me on. It's been awesome being able to do this these last 20 minutes or so with you, man. So I'm always love talking about dividend stock. So anytime someone wants to give me a platform to do that, and anyone's willing to listen to my gibberish, I'm happy to spread it.
Yeah, man, of course. And we, like you saw before Joseph come on, you guys are actually kind of like similar in your, outlook and investment strategies, but it's a lot of charts and TA stuff. So it's good to, have people like yourself that have a longer term outlook, more value oriented, like come on the show once in a while. So would love to have you back on anytime you want, man.
Well, thank you, man. I really appreciate it.
Yeah, and then sorry again for keeping you waiting backstage.
Don't worry about it, man. I got all the time in the world for you.
All right, awesome. Well, Ryan, enjoy the rest of your Wednesday. Enjoy the rest of your week. I'm going to go ahead and drop that link in the chat, and we'll have you back on soon, all right? All
right, man. You have a good day.
You too. All right, guys, that was Ryan Williams. Going to go ahead and drop that YouTube channel in the chat, or you can go with retirewithryan.com. I think that's what it is. Or I'm sure if you just Google Retire with Ryan, it'll pop up. You know what? I'll do it. Retire with... There we go. Yep, just retirewithryan.com. Right the first time again. Always right the first time, and then I switch it up. Quick check-in on the overall indices as we wrap up the show. S&P 500 is trading. Whoa, what happened to SPY? No. Now below a percent. No, it was up more than a percent. That's what I was gonna say. Now it's up 0.96%, around 384.5. Looking at, or sorry, that's the SPYs. Looking at the Qs, we are down, or sorry, up now 0.6%, but down from those highs as well. The Dow Industrial Average is up 0.5%. Bitcoin is up 0.21% over the past 24 hours. And BABA is your stock of the day, up now nearly 13% on the day, 103.78. Alibaba, your stock of the day. That will be a wrap for us today. Peace and love, y'all. We'll be back tomorrow with more Benzinga Live. Till then, stay green, stay positive, and stay chill.